Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Thematic ETFs let investors bet on big trends, from robotics to clean energy, without picking individual stocks. Funds like ARK Innovation ETF have drawn attention by focusing on disruptive tech, showing how these ETFs can tap into high-growth sectors. They've become a favorite for those wanting exposure to specific themes rather than broad markets. In 2025, these funds could play a bigger role as innovation accelerates. But they come with unique risks, like higher volatility and concentration in niche areas. Here's what to know before jumping in. Understanding thematic ETFs. Thematic ETFs are designed for investors who want to bet on the next big thing, whether it's AI, electric vehicles, or space exploration, without the guesswork of picking individual stocks. Unlike traditional ETFs that track broad markets, like the S&P 500, these funds zoom in on specific trends, innovations, or industries. They combine the diversification of ETFs with the precision of a targeted strategy. What sets thematic ETFs apart? Thematic ETFs don't just follow the market, they chase the future. Here's how they stand out. Focused exposure. They invest in companies driving a single theme, like blockchain or genomics, rather than spreading across entire sectors. Higher growth potential and risk. By concentrating on emerging trends, they can outperform or drop faster than broad market ETFs. Active management influence. Some, like ARK's funds, rely heavily on research to pick disruptive innovators, blurring the line between active and passive investing. While traditional ETFs offer stability, thematic ETFs thrive on change. They're ideal if you believe in a trend's long-term potential and can handle short-term volatility. Examples of popular thematic ETFs. A few funds have become poster children for thematic investing, attracting attention for their bold strategies. ARK Innovation ETF, RKK. Cathie Wood's flagship fund targets disruptive tech. Think Tesla, CRISPR, and Roku. It's volatile, but rewards believers in innovation. Global X Robotics and AI ETF, BOTS. This fund bets on automation, holding everything from industrial robots to AI software leaders. iShares Global Clean Energy ETF, ICLN. Focused on renewables, it's a play on the shift away from fossil fuels. Performance swings with these ETFs are common. When their themes heat up, they soar. When trends cool, they can struggle. That's the trade-off for chasing megatrends. The appeal of thematic investing. Thematic ETFs pull investors in with a clear promise: growth in areas prime for disruption. Unlike traditional funds, they don't just follow the market, they aim to ride waves of change. Whether it's breakthroughs in biotech or the push for clean energy, these ETFs make it easy to back big ideas without betting on single stocks. Growth potential in niche markets. Thematic ETFs target sectors where breakthroughs happen fast. Think AI, cybersecurity, or lab-grown food, industries with room to explode. Traditional funds might dabble in these areas, but thematic ETFs go all in. Here's why that matters. Early stage upside. Emerging trends often grow faster than established markets. A robotics ETF, for example, could surge as automation expands. Focused momentum. When a theme gains traction, every holding in the ETF benefits. Renewable energy funds soared during the green energy push. Just one example. Less dilution. Broad market ETFs spread your money across hundreds of companies. Thematic ETFs cut out the noise, zeroing in on innovators. Of course, niche means volatile. These sectors can dip as quickly as they rise. But for investors willing to stomach swings, the payoff potential is real. Aligning investments with values. Many investors don't just want returns, They want their money to reflect their beliefs. Thematic ETFs make that possible. Sustainability focus. Funds like ICLN, Clean Energy, let you back renewable power without analyzing wind farm stocks yourself. Tech for good. ETFs targeting ethical AI or medical breakthroughs appeal to those who want profits with purpose. Transparency. It's easier to track whether your money supports, say, carbon-neutral companies versus a vague ESG label. You're not just chasing performance here. You're voting with your dollars, putting capital behind the changes you want to see. That's powerful, and why these ETFs resonate beyond Wall Street. The best part? You don't need to be an expert. Thematic ETFs bundle conviction and convenience, letting you invest in the future on your terms. Risks and challenges of thematic ETFs. The appeal of thematic ETFs is clear. They offer a front-row seat to innovative trends. But with that potential comes real risks. These funds hinge on a single idea, making them more sensitive to shifts in sentiment, regulation, or technology. Let's break down the key challenges before jumping in. Volatility and market sensitivity. Thematic ETFs live and die by their niche. A robotics ETF might surge when factories automate but drop if the economy slows. Why? Unlike broad market funds, these ETFs lack diversification to cushion the blow. That's the end of part 1. Stay tuned for part 2. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.